All righty. Hey, welcome to the Hurley Investments Market View Commentary for the 13th, Monday, for 13th of February, 2023. I've got quite a bit of information. Key will be re-recording last week's. For whatever reason, it was not recorded. I think it actually had a corrupt file. And when the file gets corrupt, it makes it awfully difficult to then post it to have us have the opportunity to hear it and all that kind of good stuff. So we will work on getting a recording from last week's back out online to you. For this week, the short answer is what the CPI CPI, here we go. This is really kind of confusing, but we are going to have our CPI numbers tomorrow. Year over year, our inflation is up 6.5%. There's certain sectors or categories, and here it is right here. I love looking at the big picture, right? Last year, we were up like 7.3%, meaning 2021. If we get a number above 6.3%, that means over 2 years, we're going to be up like 15% total. The categories over here on the left that make up the CPI are food and beverage, housing, equivalent rent, apparel, transportation, vehicles, motor fuel, medical care, education and communication, special indices, core energy services. They've got these all broken up into these certain categories. Does anyone know what happened last Friday? Anyone know what happened in the federal government last Friday? And maybe that's why the balloons, the weather balloons, are floating over the U.S. Nobody knows? All right, I'm going to pick on someone. Bill, Stewart, Abraham, I would figure you guys would know. You're doing your own trading. You're kind of on top of this. What happened last Friday? No, it's not the debt ceiling, but that will become a problem here shortly. Probably meaning like June or something, right? No. Well, thank you, William, for at least putting a couple question marks in there. Okay. Last Friday, they changed the value of equivalent housing and rent, and what was the other one? And higher used price, and where is it? It's got to be vehicles. It's got to be vehicles. So what they did is for rent, and they upped the percentage of rent on what it does to the CPI. They upped ever so slightly housing, and they dropped vehicle purchases. It's like non-existent. It shouldn't even be in the CPI, but they created a reweighting, which is funny because the things that they seem to have done that on, were some big hard hitters. And let's face it, last month, motor fuel came down in December and energy prices came down in December. What's happened in the last month to the price of gasoline? Anyone know what's happened in last month to the price of gasoline? Ooh, Mod says down. Down, coming down here. Okay. It's funny. Everyone says coming down. Are you telling me it's cheaper to, well, how would I say this? So at December around Christmas, I could buy gas for roughly $3. It was basically priced at $3 in Utah. That was the average price of gas. Now I'm paying $3.50 for my price of gas. That's because, Bill, you have more refineries there in Louisiana. But for me, the price of gas has gone up. If, in fact, I should probably, let me Google that. Let me show you what I'm up against. Then we're going to do it nationwide. Utah average price of gas. Let's just do it this way. Utah average gas prices. Man. There we go. I just found it interesting. A month ago, we were at 330. Now we're at 378 is the short answer. So out of curiosity, let's find out average nationwide price for gas. I want them all though. Not statewide. I want, give me an average of all of them together. Not finding it. December 332, January 344. So I don't know. Here I am making a big point of this, right? All I'm saying is that we have a problem. We have a huge amount of an increase. So as I'm trying to say, tomorrow, one of the biggest movers of the market is, how would I say this, is going through a change in their calculations. And this is what started off the big gouge in some of the how do I say this? This is what we feel at most. Fuel prices and food prices are typically where we feel inflation the most. And we're in trouble. We're in trouble. As I was studying today and listening to today, pretty interesting because JP Morgan came out with where everything's going to be. If we're below 6%, the odds are 5% of that happening. We'll be up 2.5 to 3%. If we are in 6.0 to 6.3, we'll probably be up 1.5 to 2%. If we're to 6.4 and 6.5, we'll lose 75 basis points to 1.5%. If we're above 6.5, probably going to be down 2.5 to 3% tomorrow. The problem is it's an adjusted rate now. And I mean, things look ugly for tomorrow. I hope I'm wrong. I hope we see some things go up. But the problem is if they go up, what would it have been? Are the changes making changes to falsify these numbers? Are the changes just because an administration wants the stock market to go up in an election year? There's a whole lot of what ifs, but I found an interesting article because can anyone tell me why we were down so much last week? Someone tell me. In your research and what you read, why are we down so much last week? And just to let you know, last week in California, I paid $7.05 for a gallon of gas outside of Napa Valley. Paid $4.57 in Reno. Paid $6.15 in LA. Paid $5.89 in San Clemente, San Diego area. It was awful. No one typed anything in. What was the cause last week of our markets going down? Any guesses? And again, it's not that I have an exact idea, right? Any guesses for the market drop last week? Which is pretty significant, right? China tension. So that's a good one, right? We had weather balloons that are taking pictures of our sites, which is really anything you can already see on Google Earth, which is kind of funny. But could be weather balloons, could be China. I like the aliens, right? Credit debt is rising and series are not keeping up. Salaries not keeping up. That is true, but they're not rising to a worry level because it's defaults that we worry about. The economy sucks. I agree. China and balloons, possibly. Profit taking. Pretty interesting because when we saw the drop last Tuesday, the biggest drop was out of Germany and the European Union. And that coincided with the announcement that Germany was going to sell aircraft and mid to long range missiles to Ukraine. So all of a sudden, Ukraine has the ability to now attack Russia on its own soil. There was some talk, Ukraine was saying, hey, Russia's going to go into Moldavia, I believe, is that country that is a UN country. It seemed like if you follow the money flows, there was a lot of money leaving the European Union countries A lot of cashing in of funds, but they weren't going to the US. They weren't going anywhere outside. It just was a rebalancing of proportion where a lot of people went to cash and there are a lot of withdrawals into private savings or money market accounts. It sounded like some people got the idea that Ukraine's going to be able to strike back, which will escalate tensions in the war. And that seemed to have been right alongside with little announcements along the way on seeing things drop, which is interesting because it could have been profit taking. It could have been China tensions, rising bond yields. Yes, but it wasn't significant and it wasn't global. Yeah, we had a global meltdown in markets last week. So that's why I was surprised. I was surprised for seeing no follow through today. I would have thought we would have seen that follow through and we keep on heading down, that news would come out, right? Instead, we had an up day, and it's kind of a hopium up day. And I'm gonna try to, how am I gonna say this? It surprises me. I'm just gonna say it surprises me to see so much hope, and at the same time, I might say that even though we have so much hope, at the same time, there is no end in sight. There literally is no end. There is no end in sight. Why are we so excited about something? There's no stopping. In fact, I found it interesting on Bloomberg today. We had someone say, well, the Fed could cut rates this week. Or this year. Does anyone think that the Fed's going to cut rates this year? Is there anyone that's going, you know what? The back end of this year, we're going to have a huge rate cut and we're going to take off. There's no end in sight. And it doesn't make sense. I mean, people have asked me, Kevin, are we going to have a better back end of the year? What do you guys think? Are we going to have a better back end of the year, the last 6 months of 2023, than we will the first part of 2023? There are some reasons. I mean, the short answer is I would think so. No more interest rate hikes, right? That in itself might be the catalyst. Excuse me as I sneeze into your ear. That might be the catalyst, right? We could see lowering inflation because of the rate hikes, which could lower things and make it a better half of next year. Something else that I found really interesting might be the fact that next year, right? The next year hopium. Next year, we could have rate cuts. And if the market's forward looking, right, it might price that in the latter half of this year. I like a couple of the comments here. Depends on the Feds. I think it'll be worse. The market will suck everyone in, then crash. You don't think it'll be a flat on balance here? I don't know. And I don't know. I fall in the line of Morgan Stanley Wilson's comments here. He's basically saying there's a disconnect between the rate hikes, the rate cuts, earnings and growth, inflation, and pricing power. There is such a disconnect with reality on our stock market that it's shocking. We saw pretty piss poor earnings on lower than expected expectations this year. We are in our earnings recession. Whatever the reason is, whether it's chips, whether it's war, whether it's higher prices, whether it's less spendable cash, we are currently in an earnings recession, and earnings missed dramatically on the S&P on what is supposed to be the best quarter on the year. We sell all of our products. Retail looks awful. If you noticed what Keith said a couple weeks ago, right? Retail sucks, except for a few select name brands. Big retail, Target, Walmart, Tapestry, kind of bombed. Lululemon, Nike, a little bit better. Under Armour did awesome. But the market hates Under Armour right now, so it's sucking it again. The earnings don't add up. When the Fed continues to raise rates, they're going to raise in March, they're going to raise in May. They already said they were. It sounds like they might raise in June or July. I can't remember how it goes, possibly in August. I don't remember when those rate hikes are. Well, it's only a quarter point. It's kind of like inflation. Inflation is down year over year. We're only going to be at like 6.5%. Well, you add it to the 7.5 the year before and the 4% the year before, we're at like 20% inflation rolling over the last 3 years. We should be at 6% net. We're 333% higher on inflation over a 3-year rolling period. And we're supposed to be happy because it's down 1% year over year. It doesn't add up. So my warning is you better be protected. You better be ready for the crap to hit the fan, because none of it adds up right now. And it comes all the way to not understanding the CPI, not understanding what the changes in calculations, not making sense of how much better it's going to be down the road, not paying attention to money flows out of funds in Europe into cash and money market accounts, not paying attention to the ridiculous earnings we have on some companies, and they can't go higher. The ridiculous earnings we have on some companies that were awful, and they did go higher. Great earnings on some companies, and they're going down. The fact that banks will make bank, no pun intended there, right? Banks are going to make banks on higher interest rates, a bigger spread, better returns on mortgages, on cars, on credit cards, and they can't move. It really doesn't add up. So I'm just going to throw the warning out. if we make a huge run higher, we're going to roll our protection up. The only thing that we're trying to stay without protection on are the things that should be truly going higher, banks and financials. We want to see those run because they're in an environment that's perfectly set up for them to make more money. It's right there. You know what the funny part is? Do you know where banks make their most money from when it comes to trading or investing? Anyone know? Someone take a wild guess. Where do banks make their big bucks from in investing? Options, well, yes, and fees. Where are those fees located, though? Where's the big money for banks? You can truly find it in two places. One is more of a commercial type of application. One is an investing application. Any ideas? Overnight. So no, they used to when you didn't have a percentage, right? But banks make their money in two main areas. And it's rather funny because it makes perfect sense, right? Commercial lending, because it's so big and they can widen the spread. Commercial lending can also fall into credit card debt, but it's really commercial lending. If you check their balance sheets, that's the big money in commercial lending. And then the other one are their bond funds. Bond funds, all they're doing is they're rolling their own debt, which is a little scary because they'd be rolling their own debt into bigger, more expensive bond funds. But because of the fees paid for it, it happens all the time. But it's bond funds. Third, and it's kind of a distant third below these, mutual funds, right? It's a distant third, but it's mutual funds. Shocking. All right, so here we go. Just a couple things to pay attention to. Big picture, I found it pretty interesting. Don't believe all the hype. There's no question the financial crisis and global pandemic led to the hardest landings for the U.S. economy. But we haven't felt it, right? We haven't felt it yet. How would I say this? We're going to feel it soon enough. It's there. All the numbers add up, no matter how much sugar or chocolate you go to hide the crap, there's still crap hidden on the inside. What it all means. Time will be the ultimate tell in terms of how the U.S. economy evolves. We had a pretty solid fourth quarter with a 2.9 annualized rate of return. The model now is we're going to have a 2.2% growth in the first quarter. So let me ask you guys this. Soft landing, hard landing, pillow soft landing. Does anyone see a 2.2% growth through January, February, and March? If you do, tell me how, tell me why. If you don't, tell me how, tell me why. Inversions along the yield curve, the treasury yield curve, aren't giving a friendly economic signal. We've seen an inverted yield curve. It's dropped our market significantly. Yet we're ignoring it right now. With all due respect, we all just had a great Christmas. I'm pretty sure durable goods was coming down. We're going to watch inflation be up higher than last month. It might be coming down year over year, but it's shocking. The numbers don't add up right now. Raise that protection as you get to see those highs and you start to see some stocks fall down. The big picture. I like the last paragraph, right? We've got the consumer price CPI numbers tomorrow, but we have industrial production, retail sales on Wednesday, building permits and housing starts on Thursday. We still have more economic news that will most likely not be good through the next couple of days. Tuesday, Wednesday, Thursday, it doesn't look good. Kevin, you think we'll go down on Friday? Probably because it's options expiration and you'll have a little bit of clearing out. If we're going to ask me where I think we're going to go this week, I'm following the trend from last week. We're going to go lower. Do you see the last couple up here at the top? Do you see the touch up, touch up, touch up, touch up, touch up? The trend right now is bouncing along a flat building your base. Anyone know what happens when you break below that 50 line? What usually happens when you break below that 50 line? Someone who's taken the education, technical analysis, this is a pretty beginning type question. What happens when we hit below that blue line? Well, I can show you an example right here. Was a 10%, 11% drop. We might only fall to the 200 day. We're supposed to go up like 8.3%. We have our golden cross. The 50-day crosses over the 200. Bottom falls out with no more buy orders. Perfectly said. Looks like to get net support level. Yes, you're going to fall down at next support level, which is 3,200, about a 7% drop on the Dow Jones Industrial Average. Let's take a look at the S&P. Let's see if we see the same thing. It looks different. What? The charts look different? We've had, if we go up here to the RSI Relative Strength Index, we had a touch, leveling off, comes down. I mean, we're all over the place on the RSI. Where would I expect us to head to? Well, last time we got to our resistance level at 41.82, we took a pretty good drop and tested the 4,050-ish level. Wouldn't surprise me to come down and test the 50-day or the 200, but we have pretty good support at 39.70 and 39.44. That would be roughly, again, a 6.66 to 7% drop in the S&P 500. If we look at the NASDAQ, the most volatile, it looks similar to the S&P, but remember it lost what? 38% of its value. Next support level will be 11,434 from 11,891. We'd lose 450 points. It actually looks the best out of the three. People have asked me, Where am I going to end February? I'm still saying up 2% because we had a little run. I'm going to say up 2%, but that will most likely change. I really would expect February to be down 2%. But my expectations are not coming to pass yet. The numbers stayed a loss, but until the market catches up, who knows, right? Who knows? Earnings this week, we've got Marriott and Coke tomorrow, Airbnb, Roku on Wednesday with Zillow, Crocs on Thursday, DraftKings on Thursday, HubSpot, AUI is a gold company, Deere possibly on Friday. It seems like we've had Deere a couple times. They keep changing their dates. Economic reports, big day tomorrow with CPI, retail sales on Wednesday with the capitalization, industrial production, and HB housing market index. Thursday, housing starts building permits. Retail sales Wednesday, if I didn't say that, I'm sorry. How am I looking to trade? Currently running mostly stocks with protection. And that's the short answer right there. That is what we're doing. We see them run up, we add them up high. As they come back down, we're taking them off. We're going to do the little play. We're going to do the little play back and forth. We have earnings next week, right? We have Baidu and Square earnings next week. Let me show you a really interesting chart on Baidu. If I just sat here and had you guys look at Baidu, should do a better job of getting it prepped and ready. If you were looking at a chart on Baidu, there you have it. For those of you that have had an education, what do you see in Baidu? What do you, if you look at Baidu, great comment, gaps galore. There are gaps where Baidu has just bumped up, right? Nice little gap there, nice little gap there, gaps, 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 and the gaps have been up and down, kind of clear across the board. It's really funny because a couple of you right in here were like, Kevin, you have got to bail out of this stock. Thank goodness we didn't, right? If you take a look at Baidu, we just hit 100% return. We hit 100% return. Unfortunately, we now have Elliott wave or Fibonacci retracements. We have herd mentality. Someone said a pretty bull channel. Love it. In fact, we were loving it all the way until we pulled it up on FinViz, right? Pulled it up on FinViz. There we go. Look at this chart. This chart kind of tells a bit of a different story, right? An amazing gap on the way up. I'm going to use the blue one, right? An amazing, I guess this is purple. Pink, excuse me, pink. Amazing blue trend line on the way up. You can shift that trend line over, and actually the last 2 days, we broke that trend line. If you play it just a little bit higher. So we broke the trend line and we have two pretty big levels of resistance to get over. Hey, it's nothing. It's nothing that a good earnings can't take us higher on. But at the same time, it's nothing like a bad earnings that won't put us back down in that 115 range. as I was talking to Keeve, and let's see if I can't draw. We'll see, I think I've got this interactive. Let's see if gonna draw some little chart lines here. I kind of like this because it makes a whole lot of sense, right? That's a more adequate trend line. And if I was to take another one at that 150-ish range, 155 range, we have this, which again makes a pretty darn good pennant. Which, if you put not Elliott waves, Bollinger Bands, you're probably looking at a pinching. And a pennant usually is just saying we're expecting a breakout. It's either going to go higher or it's going to go lower. If you shift those to give yourself maybe the best opportunity to look at an alternative way to see the stock, you can take those same trend lines and run them like that. But instead of the 155, you should probably run the 150s, which isn't quite as close. Your pennant's not as close to your point right here. And when it hits that point, it's going to break up or it's going to break down. Earnings next week. So Baidu is an interesting one. 160 puts currently in place. We've got a lot of profit in Baidu. We have a little extra in Baidu if we need it. But an interesting earnings are going to be for earnings for Square and Baidu next week. Not to mention next week, we have Friday, we have options expiration, right? Next week, we also have a holiday on Monday. We have a Monday holiday. Big money's going to be out of this on Thursday. There will be light trading on Friday. We'll have Monday, the day off. It better be President's Day. I think that's what it is, right? President's Day. So I kind of want to rip the Band-Aid off and be prepared for it. I want to see some bad news tomorrow. I want to see the market go down so we can capitalize on the downward movement and see a push higher next week. Kevin, what would the push higher be? It's going to be a technical bounce. It's going to be a drop of 200 points to the 50-day, a drop of 250 points to the 200-day. It's going to be a technical bounce. We give up that 6%, we'll be down. We're prepared for it. We're where we need to be. It'll be very interesting to see where we end up. All right, here. I've taken 45 minutes. I need to save some time for your guys' questions. Interesting article. If Nick Haley makes a presidential run, it would split the vote of DeSantis and help Trump. If these two got along, look for a Trump-Haley VP role, presidential role, and let's see if some things don't change. Very interesting article on how this would split. I didn't realize it. I haven't fact checked it, but it seems to make sense right now, so I stuck it in here. 85-year Harvard study found the #1 to live longer and be happy in life: social interactions. A couple of you asked me, why do you put this feel good kind of crap in here, right? Well, William, I put this feel good kind of crap in here because sometimes it's what I need. It's awfully tough being told how much the job you do is unpredictable and sucks and it's gambling and it's this and it's that. This is why I put it in here. Pretty interesting article. I do suggest you spend some time going over it. It's a feel good, what's happening. U.S. says Chinese military behind the vast aerial spy program. Yes, I don't think they're weather balloons. I think they're taking pictures of areas that they can't see. Because of the risk, I found it laughable that we were trying to track the pattern and see what they were doing. What if that balloon had biological weapons on it? Stupid. Borders, protect your borders. Doesn't make sense to me. Very interesting article on Disney and what's happening. But the short answer comes down to this. With all the new stuff that's been put into place, it doesn't look like much is going to change. And it's not in DeSantos' best interest to rock the boat any more than he already has, because it's tens of thousands of jobs and hundreds of millions of dollars of tax and revenue that goes to the state. I am not a fan of Disney's woke stance. I think it's completely ridiculous that a CFO, a CEO, a COO wants to make or put their nose or their suggestions into elementary education's should be taught kind of things. But I also don't think that it's the smartest thing to do for DeSantos. As much as I don't like Disney right now, I am ready to make money off of them, and I am very interested in the regime change because I think that wokeness or some of that infringing on parental rights was held at bay with Iger versus Chepix. It's an interesting article. I know we each have our own opinions on this, but as of right now, I'm not worried about Disney having some big issues. But if they do, we'll just double and triple up on puts, get out of the shares, and make more money on the way down than we had in the stock positions in the first place. With that said, what questions do you guys have that I can answer for you? And yes, I know one already came across. We are looking to get through the month of February, and the month of March will be a lot of DocuSigns to work on getting accounts transferred over. We also will most likely be transferring positions in a 2 to 3 day manner with protection on, and can be able to add double the puts on the new brokerage firm if we need to. But we're really working on the next couple of weeks prepping these DocuSign documents to send them out in a wave the beginning of March. So I know that question was coming up. Hopefully I got that answered for you already. And yes, William, they do allow international foreign, how is that? Foreign natives to obviously trade in the U.S. markets. Any questions? I know I was probably sounding a little disjointed there at the start. Wasn't sure where I was going today to explain what was going to happen, but I think a lot of that's because that there are no market experts in an unexplainable market. When 2 + 2 doesn't equal 4, you kind of scratch your head and you're like, what kind of math is this market doing right now? Steve, anything you want to throw in that maybe I forgot today that I should have said? Death pause. Oh, Well, if there are no questions coming in, guys, I appreciate you being here. I hope this helps you understand why we have positions on and what we're doing. If you do have any one-on-one questions, you are definitely over my, you're definitely, what I'm trying to say. If you do have any questions that you want them answered one-on-one, please text them on over to me or email me and I will get back to you. Someone's mentioning that I glossed over my alien invasion comment. It was cute. I did mention aliens, but I didn't want to spend too much time on it. All right, guys. Have a good evening. We will not be having a Thursday. No Thursday trade market, trade finds or adjustments because of the holidays. And we will push next Monday's commentary to Tuesday. You will see those emails coming to you with those changes. Guys, have a wonderful holiday, and we look forward to seeing you next week. Bye-bye.